Hey guys, it's Max. How's everybody doing? Beautiful, beautiful 70-degree picturesque day here in Austin. It finally got nice. Sorry I didn't have an end of day live stream right when the market closed, but I fell asleep. I decided to take a nap for a while. All right, let's get up and see, or let me wake up and see what in the heck I missed. Looks like I missed some drama in my Discord. I can't even really follow what's. I'm too old for drama. I'm bad at following stuff. All right, well, let's talk markets. Well, I like that. Okay, this is just a 1-minute chart. I did have this on, and I kept waking up while I was asleep, and it rallied towards the end of the day. So that's why I wasn't worried. I was going to come back on if it sold off. But let's get it on something better than 1-minute charts. Let's look at a 30-minute chart. Well, this is really nice. This is really nice. Outside of this, well, it would have been nicer, though. Hang on. Let's look at a daily chart. I guess the daily charts are right here. Gosh darn it. I never did find out what happened to VYLD. I mean, I just Googled it, and they were halted for volatility. But I didn't find anything, any kind of scandal or anything. Well, I was trying to show that we got within the end of the previous day's range, but we actually fell a little bit short. If you look at the bar is green in color because the open was lower than the close, or the close was higher than the open, I should say. But the bar itself had a lower high and a lower low. So it's a good sign, but it's minimal at best. All right, that's the SPYs anyway. We'll take it though. At least it didn't close on the lows like Friday. When you close on the lows like Thursday or Friday, the market's telling you that it might go lower the next day. And it does lots of times when it closes on the lows. Right there, it closed on the lows. Right there, it closed on the lows. There, it closed on the lows, went lower. There, it closed on the lows, went lower. There, it closed on the lows. Actually went higher that day, the next day. But there, anyway, you guys get the picture. Here's gold. Gold's pulling back a little bit on the daily bar, but still the overall trend of the thing is incredible. All right. I guess the one other chart I really wanted to focus on was VIX. This daily bar, we were talking about this in Discord too. In fact, that's when I was up doing this. At 2 o'clock in the morning, I was up and I put this blue line right here because I've never seen the price open that far on VIX. That's why the price closed at 45 and opened at 60. That was incredible. But anyway, the price is almost closed that whole gap. Now, VIX did not close within the prior day's range. That would be a great sign if VIX would have closed within the prior day's VIX range, but it didn't quite do that either. So maybe we have another couple of days of sell-off in front of us. That's VIX of VIX. Well, that's ugly too. I mean, VIX of VIX hit 170 last night. Anyway. All right, let's look at, let's see what else is going on. Let's look at the first thing I find. Here's the GPTY verse, the Altiverse, or some kind of verse. All right, here's the allocations of Chippy. This one is that right? Is that Chippy's allocations? Yeah. So their biggest allocations are to Broadcom and NVIDIA. have a little bit of cash, about what is that, 4%? No, 2%, and just a little bit of the money market. Here's the change on today for those same companies. Good day for Chippy. All right, so now let's check out GPTY. GPTY was up 1.7%. That's great to see. Planeteer bouncing back, up 5%. Ariston Networks up 6%. Broadcom up 5%. Amazon up 2.5%. Apple still lagging, and AMD, of course. All right, that's GPTY. Here's LFGY. Now, LFGY, the average stock in LFGY was up a little bit. Unfortunately, LFGY itself was pulled back 2%. MicroStrategies and IBIT were pulling LFGY back. And if we look at the allocation chart, I think we'll see MicroStrategies as one of the bigger allocations, if not the biggest allocation. And I think that's the reason LFGY pulled back so far. All right. Here we have Alti. Look at this thing, up 2.9% today. Well, that is a sight for sore eyes, ULTY. It got every bit of the upside from the average stock. Look, the average stock was up 3%. Great job. Great job not being capped out on the upside. In the old day, a high yield fund would have been totally capped out, giving us a big bounce back day. There's going to be lots of big bounce back days. That's what happens in bear markets. Even if we're in this bear market for 6 more months, we'll have lots of bounce back days. About a third of them will be bounce back days, maybe more, and some vicious bounce back days. Look at Restoration Hardware, looking really nice there. They've got to do something about that Restoration Hardware. You know, I think the problem in Discord had something to do with politics. Go figure. That's always the case. And we try to limit in my Discord. We try to limit politic talking somewhat. But anyway, and I don't really. So even leaving the politics aside, so forget about the politics. Doesn't matter. You know what team you're on. The policies need to make sense for businesses. That's all I care about. And the Restoration Hardware thing, that's not, you know, that part of the policy, the Vietnam, China thing. The reason those people left Vietnam and left China and went to Vietnam is because, you know, because friendshoring was that was the deal. That was kind of a deal. Eventually, maybe we hope to get them over here. But the strategy a couple of years ago was at least put them in, you know, somewhere friendly, and that's better. So anyway, the policies have to make sense. I just get upset when the policies don't make sense. But it's not Joe's fault because Joe voted for candidate A who supports policy A, you know, and I think policy A is screwing up the nation or whatever. Gosh darn, did you guys see that? Holy shit. That was a freaking perfect 67 Corvette. Anyway, all right, I'll get back on topic. But I think a lot of people hope that their politicians would deliver more for them and haven't. But if your politician hasn't delivered for you, I'm not going to rub it in by telling you it's your fault because you voted for that politician. That's all I'm saying. It's not that it's definitely that we need to focus on the politicians that lead us astray with, you know, bad policies, and the policy's bad, but the person that supports them isn't bad. That's all I want to say. Like, for instance, I'll put it this way. So I voted for Trump. So am I bad because, you know, He fooled me too. I was hoping the tariffs would work. I really was. I mean, obviously it was a bad idea now. I agree. But I'm saying at the time I was thinking that we needed it. But I'm saying so, but it doesn't help to tell me I'm, that I'm a bad guy because I voted for him. He fooled me too, So anyway, all right, let's get back on the topic here. So that's the Alti girl. Alti's really good, dude. Alti makes me in a good mood. I mean, freaking Alti up 3%. We just need this to happen for freaking about 2 weeks, and then we'll be right back in business. No, but seriously, these freaking yields are going to be insane. I don't know if you guys are on drip or if you're taking cash, but from my calculation on triple QI, and I know no one really has that fund, but just it should be similar on most daily funds. It's making about 4x. It's able to earn about 4x. I mean, now that's so these are going to be some monster. They should be anyway, some monster payments. And that last week should have been, and next week. So, it's a great time to be in the volatility selling business. All right, so let's see, AltiGrid, Chippy. Let's look at the index buffer report. All right, now this is messed up because of VYLD. At lunch, VYLD was messing up the scale. In fact, I even think I forgot to show this at lunch, but I looked at this at one point during the day, and it's not messing up anymore. Okay, VYLD was down like 10%, but it was because it was halted. So VYLD finished the day up. Okay, let's see if that was fake news or what. Where would I be if I were a FinViz window? I mean, that's just an ugly bar. I mean, I just want to see if anyone's invested in it. No, they're selling it. Maybe that's what happened today. Maybe they don't have any assets under management anymore. Oh my gosh, option. Well, looks like somebody wanted out. $8 million. Huh. Those are insider sales, though. That's different, though. This is, I guess, this isn't an ET. Anyway, this is an ETN. It's different than an ETF. I guess I don't understand enough about it. That's why I haven't been talking that much about it. I think if you like a fund like this, let's talk about SVOL and ZVOL. I know they're down today, but that's because they're down lately, but that's because they short volatility, and volatility's been going straight up. They'll go back up when volatility goes back down. We've been talking about SVOL and ZVOL a little bit. I mean, let's see if anyone's selling that. No, in fact, we had somebody buy 20 million come into it just yesterday or something. But assets have been coming out of it ever since Victoria told people to sell it, or ever since ever since the dividend started yielding a little bit less. Well, look at these guys. So they have VIX futures. Looks like they're short VIX futures because that's carried as a debit. They're long the SPY. So long SPY, short, yeah. But then, in addition, they have some other funds. They have some bonds, some QIS, some quant stuff. Mike Green talks about that QIS all the time, or he was talking about that on that show. I hope you guys watched that show. That Mike Green and Jim Carson show was really, really good. I really liked it. This is a cool fund right here. This sounds like one of my ideas. It doesn't really perform that well, so maybe that's also similar to some of my ideas, but it's a simplified fund that gives you the S&P, but it gives you plus convexity. So I guess they own the S&P somehow, and they probably own an out of the money option or something. So in a bull market, it ought to do better. But anyway, this fund has 9% of that fund. So it's kind of a fund of funds that basically it looks like has some SPY that's hedged with some VIX futures, or vice versa, maybe some VIX that's hedged with SPY. But anyway, but these types of funds are going to do bad when volatility blows up. There's just, that's just, so what do we always say on the high yield portfolio? 20% of your overall portfolio. So you have $1 million, you have 200,000 in high yield funds, 200,000 in bonds, maybe, and 600,000 in growth. But even still, you aren't going to have 200,000 of SVOL or of XVOL, right? Because you might have 10% of your 10% in that. Because XVOL and SVOL, have a little bit of extra risk. But also somebody else in Discord, I think there's a misunderstanding. Somebody in Discord is saying they don't invest in stuff they don't understand. Great advice. SVOL and XVOL are XVOL and SVOL and any of the high yield funds, they're all doing basically the same thing, and they all need the market to behave normally. SVOL is selling time decay in a different manner. They're using futures instead of options. They're using VIX instead of the SPY, like generally we do in retail but it's the same thing. It's all of these funds are just different wrappers of the same thing. But I agree, don't do it if you don't understand it. But I don't know that you really need to. It does well in a basic mean reverting market, like we have approximately 70% of the time, like we don't have right now. But it's the same thing. It's, for all intents and purposes, it's these funds that behave like this. They're very similar to kind of THTA, which is picking up pennies in front of a steamroller, and it does iron condors, which I'm not a fan of. That's kind of the nature of these volatility strategies. They make little bits of money all the time, and now this goes for SVOL and XVOL too. They do it different than THTA, but it's just kind of the hitting for single strategy. They're just getting up there and saying, we don't want upside. Well, we're just going to go for high percentage. And it's one way of managing money, one way of many. But I believe if you're going to sell volatility, and I was trying to say this at lunch, just get up there and sell some volatility, get you some QDTE, or get you some triple QI, or get you something, get up there is some QILD, get in there some triple QI, and sell some at the money vol where you can actually make some more money. The thing that does is when you sell at the money vol, you don't have such a high variance. When you do this like Theta does in SVOL, you have high variance, meaning you win lots of the time, and lots of the time you look great, but then when you lose, it's spectacular. Anyway. We could, if we look at a back test, and I think I did this at lunch also. Let's look at THTA, and let's look at, or just go back 5 years. It'll be since the inception of both of them. The sun's getting ready to hit me. No, but that's what I'm trying to say is about Trump, or it doesn't matter who it's about. It's not the people's fault that voted for him. So I was in Discord, or just in life in general, with my friends, and my friends in life are huge Trumpers, and we actually fight because I'll call them on stuff, and I'll debate with them in real life. But we just need to keep that out of Discord because, it just. But believe me, I've heard every argument pro and against a million times and made most of them myself. But what I'm saying is, during especially during market hours. Let's just make it the rule during market hours. No talk about politics. If we have to talk about politics, okay, we talk about politics. We can't. Okay, well, the tariffs are a bad idea because it's going to cause a tax on corporations at a time when earnings are under stress. Tariffs are a bad idea because they're going to cause a tax on earnings, and the people that voted for them are total dumbasses. And that's the part that we just need to leave out. The people that voted for them are dumbasses. I mean, that's all I'm trying to say, at least in my Discord, or at least between 8 and, just the facts, ma'am, during daylight hours. But heck, if we want to debate some at night, I don't care. If you want to, I guess, I mean, I'm not one to tell you what to say. Go say whatever you want. But anyway, but yeah, let's try to keep it focused on what the actual tariffs effect on the economy is, and not the people that voted for the, you know what I'm saying? That's all I'm saying. All right. I'll stop ranting, or I'll stop talking about it. All right. So look at these, but Theta SFOL, it's the same thing. SFOL makes a little bit of money, then loses a lot, makes a little, then loses a lot. It's just that's just the way those types of the picking up pennies in front of a steamroller strategies go. That's just, and I don't, it's just not my cup of tea. But what I'm saying is, but I would be fine with Theta or SFOL in my high yield portfolio. I guess I wouldn't really, because if I would, I would have put it in my model. If I wanted it, I would have put one of them in there. All I'm saying is I would consider one of them, depending if the conditions changed, but not for maybe more than 5% of my 10% of my, it's maybe because they're risky. They're risky. Let's look at SVOL and ZVOL. SVOL and ZVOL. Now, I thought about switching my niche to politics, or making another one and just doing some political. I love politics. You guys don't understand. I watch a lot of political content on YouTube, but let's just stay on. There's just so much good stuff, especially with people like Mike Green, Jim Carson, and Jay Petrocelli, basically teaching how professionals trade options. Or they don't really teach, but there's so much access out there. There's so much transparency that we can look over Jay's shoulder and see when he rolls and see everything. We can talk. We can have him on the show every couple of months. It's just a great time to be an option trader. So there's enough Joe Rogans or people like that, political commentators out there in the world. But I have been thinking about opening up some type of second YouTube station, some type of secondary niche. But I'm still going to do this one. All right. So, but Maximum Media, it's time for Maximum Media to grow. We need to grow. So look at this one. So I always tell people ZVOL is twice as risky as SVOL. And my idea of twice as risky is it does better on the way up and worse on the way down. And if I compared these from the top, I could do, if I run a comparison from you can tell the top for these types of strategies was last July. In fact, let's just do that. Let me just show you. This is a good chance to show you guys July. All right. Well, that was when times were still good. I noticed it on the charts. I talked about it nonstop, but about July 20th last year, the whole, they call it, I think somebody like Mike Green and Jim Carson would call it the vol surface, or the vol, I don't even know, but the vol environment. There's something smarter than, it's not environment. I don't know. All right. One of you guys knows, I'm sure. All right. So SVOL and ZVOL. ZVOL is twice as risky. It goes up about twice as much. It yields about twice as much. But look, it goes down about twice as much too. And it down, we're not twice as much. It was down 20 to 26. That's 6 on 20, which is, it puts on another 30%, adds 30% risk. So that's why I always say that. And I'm still sticking by that. Somebody was asking me today that something about SVOL and ZVOL, but I think they could have a place in the portfolio. So whenever the climate for volatility switches back, then at that point, maybe they'll make it to the model portfolio, but not right now. But there's definitely worse funds out there. I'd rather have Z-Vol and S-Vol than THTA. I do not like THTA. I would not like that fund. I mean, do any of you guys have THTA? Thanks for being here. I haven't picked up anything yet, but I'm looking for longs. I'm just rolling puts. I thought my puts were dead this morning when the market went up 40 handles. I was like, my puts are dead, but I'm glad for you guys because I know everyone else is long. No, but no, I'm not. I haven't yet, but for one thing, I didn't feel good today. I was going to have another show, and I ended up taking a nap. I fell asleep for a couple of hours. I went to sleep from like 2 to 4. But I need to do that. I need to make some content, and I need to do that. And I've been thinking about that. I did it on paper last week, and I should have done it in real life. One of you guys wanted a trade idea, and this is something that I love to do when we're under the 200-day moving average is pairs trading, where you're long on one asset, long on two assets, pairs trading. But maybe you sell calls on one asset and sell puts on another or something. I mentioned I did that on Microsoft and Apple back in 2022. For me, it's a great bear market strategy. And I was just doing, so I showed a couple of ideas. So we have two pairs trades, and that's not real money, it's paper money. And, but I'm going to probably do something like this. I meant to do something like this today, but whenever the market does start acting normal, I'm going to probably put some of these on. I was just trying to wait for the free fall to stop, which anyway, I showed you guys Apple and Tesla Goldman Sachs and Schwab. Just a real easy trade. You do a bullish 3-leg on one of them, and one of them was going to have a good earnings. We saw something bad about one, but anyway, sure enough, these things, they don't profit because you know anything. They profit because you're long volatility. I mean, volatilities. When volatility goes up every day, there's a tailwind for buying options. So you can use different strategies. You don't have to just sell options, or that's been my experience. But when the market's acting normally, if you don't pretty much just sell options, you'll get cleaned out, as you guys know. It's just a tale of two different markets. But as you guys have also probably found out, when the market's not acting normally, if you keep selling options like you normally do, you could get cleaned out. It's risky, even though the volatility goes up and it causes you to get more income. It also causes you to get more. You have the risk. You have more downside risk. But anyway, I just showed an idea in Apple and Tesla. I just want to look at it again. One of them was just, and I think both of them were take your wife to dinner. You could, let me see. Now on the Apple and Tesla, it was just buying puts on one of them and buying calls, just taking a shot, buying a put spread on one, buying a call spread on the other. And one of them went down more than the other. One of them made more money than the other one lost. That's all. But yeah. So tomorrow I'm going to look for a pairs trade to put on because these kinds of trades are perfect. But I'm not going to do it like that example. I'm going to do it like the Goldman Sachs and Schwab because it's been a while since I've sold some premium. Premiums are high. In this example, on the bearish one, I sold calls to buy a put. Boy, I wish I would have done this. I mean, I didn't know the market was going to drop 10% in 2 days, obviously. But it doesn't have to do that. You can also make money if it goes the other way, these strategies. But yeah, we're going to do some pairs trading tomorrow. Or I'm going to anyway. I'm going to. I'm sorry I didn't have a show on today. Now look at this. I've been watching some of these Wells trades and these big trades that come across, and I thought this was crazy, but this guy made $594, which is a lot on one contract. This is a one contract straddle in the VIX, and he did this before volatility went up. So not only did the price of the VIX move, that's one thing in his favor. While the price of the VIX moved up volatility was expanding, and he owns options. When you own a straddle, when you're long vol, you own options. You want volatility. It's the total opposite bet. Anyway, and this guy just killed it. And he was a professional. This was a more than $1 million bet. I bet he's out of this by now. But man, I should have done that. I thought it was stupid. Of course, I thought it was stupid. I need to do all that. Any of these trades I'm looking at, I sit here and look at these trades all day long that come across these big trades. I need to start doing the ones I think are stupid. There was another one that came across today that I thought was stupid, but it's probably a big trade. Not so much stupid. It was a reverse calendar, and they don't let retail do reverse calendars. Let me see. I think Charles is here, or it's harder to do. It's because you're technically naked. Charles is here. I wanted to ask Charles about this. Yeah, this was a gigantic trade. This is it right here. It's a reverse calendar. I know this isn't it. That's not it. That's not a reverse calendar. That's just a calendar. Let me see. I put it in here somewhere and saved it for you guys. When I started, I think I just got rid of it by accident. Anyway, Charles, you were saying something. Charles is in here. If you're still in here, you were saying something about 10 Delta put flies today. Tell me about that a little bit. I was just wondering about how you would do that. Okay, Nathaniel, what do you think about the structure of YieldMax portfolio funds? Well, we don't know yet because all we've had is downside since those portfolio funds have come out. To tell you the truth, I was a little bit disappointed that GPTY didn't hedge out more the downside. I was surprised when I lined it up with another fund because GPTY has Q puts at all times. But anyway, so I was more concerned about the lack of downside. But that's a very small sample size. It's been here like 2 months, and I'm looking at one pullback. I mean, too soon to tell. But that, on the upside though, those fun. The thing is on upside. I mean, when you're doing a covered call fund, the upside's great, but it's kind of secondary because these things that pay a 50 and 100 IV. A lot of your upside is really coming from the yield. And if you just get a little upside or just stay even, that's good enough. All right. So I'm sorry I'm so far behind on these. But I guess it's too soon to tell on that. JG, not buying anything else right now. DCA into MSTU. So that's some kind of leverage. Misty, I guess. Maybe not the newest ones. All right. Well, anyway, I need to just, I want to see what Thomas is saying. I'm sorry, I can't read all these. Thomas, Z-Vol and S will start recovering. Yeah, when vol sells back down, results in a rising curve, but it'll take a very long time. Yeah, exactly. I'm just saying all I'm trying to say, and I say this same thing time and again, there's another side to all of these. These do better on the way down. There'll be a time whenever volatility starts coming in, where Z-Vol and S-Vol are up 4%. In the case when the SPY is only up 1%. I've seen it because they'll have the reverse phenomenon happen where they profit from the curve sloping the correct way, the way the way these futures guys profit from theta decay or time decay has to do with the futures curve. It's a different discipline, but it's the same philosophy. And they make money at the same time option guys do because they're relying on a mean reverting market. And market where volatility is collapsing. And even if it goes up maybe overnight and we get down, it comes back in. You guys know that the way the market is 70% of the time, the mean reverting market. Charles is saying sell vol at the money, bearish VIX vertical spread. Yeah. Agreed, Max. Tough to recover after you've been steamrolled. Yeah. I just, those funds are literally picking up pennies in front of a steamroller. I just, like I say, there was some other people that mentioned some good ones in here. Somebody mentioned Triple QI and SPY-I. Those are great, really reliable funds. Here, let me go get that dog. Hang on. All right, sit down over there, please, Aspen. All right, sorry about that. He was driving me crazy. All right, Nathaniel, what do you think? Okay, yeah, we've already talked about that. Let me try to hit someone I haven't hit. Collectors, hoping. All right, so yeah, making a collectional, a directional bet. MSTX is probably some kind of leverage. All right, I'm just trying to catch up. I should go from the bottom first. We got a good crowd today. Nathaniel says, yes, I like that MicroStrategies has been. Let's look at that. Let's look at that. That you guys might, anyone that didn't see this at lunch, let me show this again really quick. This is the Dorsey Right. This is the Dorsey Max. But that just didn't like the way they were doing it. So I'm doing the same thing they are, but I made it sensitive to months instead of to quarters. I think they're set with, I think they aren't, in my opinion, aren't sensitive enough. Plus, they don't consider there's more funds out there that are good besides just the ones in the YieldMax universe. I can get any of them. But I did the same thing as them. I didn't use point and figure, but I used a similar methodology, and there's no judgment in here. This is purely mechanical. Anyway, so best overall fund, and I guess we'll say fund of the week because I calculate these once at the end of every week. So this week it was GLD, then bond, GLDI, TLT, CTA, RISR, TLTW, MSTR, BNDI, and MSTY. And these funds could be the worst. They might pay the worst yield. They might pay $1 one month and a penny the next month. And none of that stuff I factored in. They might have the worst total return. That's not factored in either. This is purely technical, just like Dorsey Right. It just has to do is does it have momentum? So, but I just, so I looked at the whole universe anyway, but then when I just put the high yield universe, GLDI came on first, then TLTW. Anyway, this is making me BNDI and TLTW. I already have some gold coverage in the model portfolio, but I wonder if you guys think, I wanted to ask, with the global recession looming or already here or whatever, was it maybe not the best idea to get XOMO? Is oil, is oil going to be a problem just because there's going to be a glut on the market? And anyway, so I was thinking about trading some XOMO and also dumping some YQQQ exposure and getting probably BNDI. But I'm going to do that tomorrow also. I meant to do that today also, but like I said, I got tired and took a nap. So, but we're going to do that tomorrow. We're going to do some pairs trading. But I really want to make some changes in the model portfolio. I think after the nice pullback we've had, it'd be nice to take some profits out of YQQQ, pretty much let YQQQ buy a position in BNDI. I don't know. Let me know what you guys think about that. Maybe it's not the best time to do that. That's my idea. Oil and gas are exempt from tariffs. That's correct. But I was thinking oil as an inflation play because inflation's a problem. But then now we also have the problem now, so what's going to be more of a problem that I need to worry about, inflation or, the global pullback in spending that's going to really hurt XOMO. But in any event, I think it'll help bonds though. So, we'll see. We'll see. But anyway, if you guys have an opinion, you can put in the comments. Let me weigh in on it. Let's see what Charles says about ZVol and SVol. He says ZVol and SVol don't seem like investments long-term to me. To seem more like buy them. Yeah, of course. And that can go for lots of things. If you buy, even THTA, which is a fund that I don't like, is more attractive after it's already had a big VIX blow up because you can figure the next one might be another 3 or 4 years away. But if you would have done that in August, bought THTA in August, after the big blow up and thinking, okay, we're in the clear now, you'd be really unhappy. You'd be unhappy now. I mean, I'm sure there's people out there that love THTA, just like there's people that love XPay. I got so much shit for you when I said because XPay, they don't even sell options. They just sell stock. I mean, I guess that works as long as your stock always goes up, but what happens if the market drops? Remember my title of my slide? I said XPay was going to decay. Never got so much. Let's see, XPay. Let's look at XPay versus WDTE. Okay, so look at this. WDTE is spanking it. The difference is 10 to 13.5. It's 35%. It's not even, it's just, and that 35% is just because it's selling something it can never get back. It's literally, that is the definition of decay, what those guys are doing. That's erosion. That is just, I'm going to take my account and I'm going to sell it a little bit at a time. I do not get it. The WDTE guys occasionally will have profits. They'll always have income, as we know how it works. They'll always have an income and pay a dividend, but in months they don't actually have a profit, a trading profit, you'll get your yield, but the NAV will pull back, way back, like it's done. Okay, well, that sucks, but still did better than XPay, right? I mean, what am I missing? Oil's at 60. It's disgusting. Less drilling, but there's a lot more going on. Yeah. Who knows? Who knows on all of this stuff? I just think I need some exposure to bonds. So I guess at this point, all I have to decide is BNDI or TLTW. There goes a squirrel. Golly. I thought it was a possum or something running up the rafter in my carport. But yeah, I don't know what people are so in love with Round. I mean, yeah, Round Hill's a great fund. But WDT, not only that, WDT beat XPay, okay, in the pullback. And I believe it also beat XDTE. If you go from this pullback, or if you go from the July high, I don't know. I looked earlier and I thought it did beat it, or it was close, but they're both good funds. But I'm saying most people would think that, okay, XDT did beat WDT. Okay. Let's do this. Let us test it just from the December high. Okay, hang on a second. Jackson. Oh, the squirrel's taunting these. I think we got a squirrel that has a nest around here. My friend got a picture, and that's what that squirrel was doing up there. We got a mama squirrel up there. Yeah, from the December high right here, and this isn't a little bit. It's beating it by a third. It's because it has more buffer. These ones that have more buffer, these are the actually safer funds in a pullback. Technically, people never believe me, but there it is. There it is. Hi, guys. Well, I appreciate y'all for being here, and I hope y'all have a good day. And hit me up in Discord. No fighting in Discord, please. I didn't even want to make a Discord because I was afraid there'd be fighting in it. I just don't like fighting. I mean, what I'm saying is if I want to fight, I got people in real life. I have my sister, my ex-wife, my friends that are Trumpers. I mean, You know, I got plenty of debate people in real life in Discord. I'm looking for option bros. I'm looking for allocation dudes and strategists. I'm looking for macro analyst. All right, guys, I appreciate you. Here's a link to Discord. Or I thought that was a link to Discord. How's that not a link to Discord? Jesus. Hey, thanks, JG. I appreciate you. How's that not a link to Discord? You guys saw me do that. What in the hell? I mean, I hit copy. It's not. It's putting up the trade halts from before. I don't know. All right, guys. I'm going to get out of here. You guys have a good day. I appreciate you. See you.